All right, cool. But yeah, so that's inflation. So that means that if we are just saving our money, the value of our money is actually decreasing if you just have money sitting in a savings account, right? So that means that we have to be investing our money so our money can grow. We have to put our things into money where it can grow and outpace inflation. So to give you guys a realistic example of how this works, on average, inflation increases 3 to 5% per year. That's the average. So that's why we're constantly seeing things becoming more expensive every year. And the stock market grows at least 10 to 12% per year. So that means that if you put your money in a stock market, instead of just saving it in just a savings account, your money is outpacing inflation, which means your money is growing in value. That's what we want. So that's why you should be actively investing into stocks. All right. So I told you I was going to be some quizzes here. So this is so I make sure y'all understand. What's one way you make money from stocks? Don't all raise your hands at once.
Dividends.
Equity.
Equity. All right. Equity and dividends. Good job. Let's get it. Y'all following? Y'all here with me?
Yes, sir.
I bet. So now let me just show y'all how the stock market works real quick before we get into the nitty gritty. So I make sure y'all here. So we got these two companies, right? Let me close it up. Right? We have Apple. We all know Apple. How many of y'all here got an iPhone?
Everybody.
We all do.
Every single person have an iPhone. How many of y'all invested into Apple?
I am not.
Don't beat me up. Don't beat me up.
Crickets.
All right, bet. So let me show y'all something, right? So we all have an iPhone, right? Let's look at Apple stock real quick. So I'm gonna just show y'all what Apple has performed in a
Oh,
year.
yeah, we got a whole stock app right on our phones.
You said what?
I forgot we all don't every iPhone come with a stocks app.
It does, and most people delete it to save space. Shaking my head. Anyways, right? So I put it on a 1 year mark, right? So just to give you a little education here, 1D means 1 day, 5D means 5 days, 1 month means 1M means 1 month, 6M 6 months. YTD means year to date. So that basically means that January 1st, 2024 to December 13th, 2024. So the start of the year to today's current date. And then 1 year just basically means December 13th, 2023 to December 13th, 2024, right? And then 5 years is 5 years, and max is just like long time history. So if you look, if anybody invested into, which we couldn't because we weren't alive for most of us, anybody invested into Apple from the beginning, they're up crazy, right? But we're not even gonna pay attention to that. We're gonna look at year to date, right? So if you basically, let's say January 1st, you said to yourself, like, you know what? I'm about to start investing my money and I'm gonna do it consistently or whatever. Or let's say January 1st, you just took a lump sum of money, you just put it in. That means your money would have grown 33%, which is pretty excellent. Think about
Somebody.
just think about that. 33%. Right? So that basically means let's say if let's do some basic math real quick. Right? We got Google calculator. Let me show y'all real quick. This is how you do the math. Right? So let's say y'all took at the start of this year something reasonable, like $500, right? And you did 33% of $500. That means you would have got an extra 165, which is not a lot. It's not a lot at all. But plus the original investment, 665. But think about it. You didn't have to do any physical labor for that money. And then it would have been more if you put in more. And if you did it consistently, it would have been more money that you had. And then for me, all you have to see is that it's possible because this is a machine, right? Because 33% stays the same. So if like you did 1,000, it would have been 33% of 1,000. If you did 10,000, it would have been 33% of 10,000, right? But all you have to see is that it works, is that this is possible. You know what I'm saying? And that's the power of the stock market. And that's just looking at one cap company, which is Apple. Now let's look at NVIDIA. So NVIDIA is a technology company, right? And this company makes AI chips, right? It makes a lot of the chips that goes into our phones, into like how many of y'all use ChatGPT? I use it every day. Or like Claude, like all platforms. NVIDIA is the company making the chips for these platforms. NVIDIA is up 178%. Again, this is one company. It's $134. Just think about that. A pair of sneakers is like 250, right? When we go to our friends' birthday dinners, we gotta pay for the Uber or the drop, the gas or whatever to get there. We probably gotta get our friend a gift. We gotta pay to go to the dinner. Then they be at the dinners be at the steakhouses. So that's $100 meal. So we spend 135. You feel me? So if we can spend 135 to like have fun and things like that, we can spend that to invest in ourselves and get a return. Think about that. 178%. You feel me? Y'all here with me? Y'all see the power of investing?
Absolutely.
Feel me? All right. So I was able to invest in this company when it was at $100. You feel me? So you're able to see it grow in real time. So I just wanted to show y'all two successful companies. And again, this is from the start of January 1st to now, right? So just think about what these companies are going to do in 2 years, 3 years. You got what I'm saying? So I don't want y'all to think that time is up. The reason why I'm having this call is so that you guys can get started now. All right. So now let's get to it. So this is where you guys will start to understand how the stock market works. There are 11 sectors in the stock market. Each sector basically just represents what the company does, right? So companies that do similar things, they're in the same sector. So for example, you have like United Healthcare, right? That's a healthcare company, so it will be in a healthcare sector. You have Bank of America, Chase, right? TD, right? These are banks that will be in the financials sector, right? So basically, all the companies that operate the same belong in that specific sector. Yeah, I get that?
Yeah.
Right? The reason why the sectors are important is because during different type of seasons, it's good to invest in different sectors. And there are some sectors that are just going to go up regardless. So for example, tech is going to do well regardless. But one of the reasons why tech is doing very, very well now is because who remembers during a pandemic when they gave us all that free money, quote unquote free money. Y'all remember that?
Yeah.
And then
Mm-hmm.
interest rates were really, really low. So that basically means that it was cheaper to borrow money. So these large corporations, they borrow lots of money. That's how they're able to make millions of iPhones and employ millions of people, right? They got to borrow money to do that. And because it was cheaper for them to get to borrow money, that means that now they were able to borrow a lot of money and then use that to make way more money. So that's why the tech field is doing very, very good, very, very good, has been doing good since the pandemic, right? Plus, technology is the future as well. All right. And as you guys can see also on here, y'all see real estate on here. You can actually invest into real estate on the stock market. That's called Real Estate Investment Trust. It's a REIT. That's the acronym. It's REIT. And that's basically you investing into companies that basically buy real estate. So how many guys ever been to a mall and you saw Simon Property or like Brookfield Properties? Y'all confused? Let me show y'all.
Uh,
Yeah.
I don't
Yeah.
think I've ever saw that before.
Let me. So yeah, I never been to a mall
Yeah, I think Simon Realty.
that had this logo right here.
Yeah.
Let me see. Why is my screen black?
Roosevelt Fillmore got it.
Roosevelt,
Oh
exactly.
yes, actually I have. I'm
Yep,
bugging.
a lot, especially a lot of malls that have a lot of luxury stores in them, like the Louis Vuitton, stuff
Woodbury.
like that. Yes, so Simon Property Group. Simon Property Group is an American real estate investment trust, or REIT, that invests into shopping malls, outlet centers, and community lifestyle centers. It is the largest owner of shopping malls in the United States. Now let's look at their stock, right? 170, 179, right? Let's look at them year to date, 25%. Think
So
about it.
that price is one share.
Yes, to buy one share is 179.
Okay, but you could buy as many as you want.
You could buy as many as you want. You could also buy $100 worth, right? You don't have to buy the whole share, which we'll get into. But
Okay.
again, the average person, when you go to the mall, you're spending way more than 179. You feel
Right.
me? But when you go to the mall, you're just there shopping, but you can be a part owner of the company that own the mall. You feel me? Like this is real life stuff. Even like some of y'all on here from Brooklyn, right? You have like Kings Plaza, right? And it's real simple to get the information. All you have to look up is who owns Kings Plaza Mall, and it'll tell you Mace Rich, right? You go look up and you look up Mace Rich stock. It's like $13 or something. Oh, it went up. See, went up crazy. It was like $13, right? So it's $21 now, right? So it went up 38%. You feel me? Like this is real life stuff. Real life
Yeah,
stuff.
that's
So,
tough.
and sometimes people are like, I remember when I first wanted to get into real estate, somebody told me like, "Oh, you want to just make your first 100,000 and then come back to me." Right? That was discouraging to me at the time because I'm like, "Damn, how the hell I make $100,000?" You feel me? This quick, right? But then if I knew about REITs, that was an easy thing to get into kind of real estate and then build that up. You feel me? So it's a lot of different ways that we can invest. It's a lot of different things that we can invest in, and we can invest into things that we're familiar with and things that we understand. All right. So let's get back to it. So I just wanted to break down real estate on here so y'all can understand that. So now a stock index. Now we about to get into the good juice. All right. A stock index tracks how well a group of companies is doing over a certain time period. Right. So it helps us see how the stock market is actually performing. All right. The reason why this is important is because if someone asks you, how's the stock market doing? You can't just judge that off of one company. I can't tell how the stock market is doing just by looking at Apple or like NVIDIA, right? Because that doesn't give me an accurate explanation of all the other companies that exist. You know what I'm saying? So it's like you can't ask me like, oh, how's your class doing? By just telling you about one student, I have to tell you the average of all the students and how they're doing. Does that make sense? Right? So that is what a stock index does. A stock index basically groups a bunch of stocks together and it shows the performance of all those stocks put together. So here are the top three like kind of stock index that people look at when they're referring to like the stock market. So the first one is the S&P 500. All right. So the S&P 500 measures the top 500 companies in the United States. All right? Important. Right? So what companies would y'all think is in the S&P 500 off the top of your head?
Apple,
Amazon?
Amazon, Apple,
Disney, Microsoft.
Microsoft. Okay. All right, hold y'all thoughts. I'm gonna hold y'all thoughts and nobody cheat. I'm gonna ask y'all to each of y'all give me y'all top three and we're gonna see. All right. Well, I'm gonna ask y'all to give me what companies do y'all think are the top three. Next is NASDAQ, right? So the NASDAQ measures the top 3,000 type of tech and growth companies. So they focus on like tech companies and growth companies in their index. All right. Anybody ever seen this before? The NASDAQ? Any of my New
Yeah.
Yorkers? Y'all seen this
Mm-hmm.
billboard in Times Square? They got the big NASDAQ billboard in Times Square. You feel me? Then you got Dow Jones, right? Dow Jones. Dow Jones measures the 30 major US companies. So Dow Jones is a little bit smaller, but they measure the 30 top US companies. So we're gonna look at all these index real quick so that you guys can become familiar with it and y'all understand how to do like your own research. All right. So I need two people to give me their top three. What do you think of the top three companies in the S&P 500 right now? Top three. Apple, Microsoft, Disney. Okay, Disney. What's Disney went viral or something? Why y'all keep saying Disney?
Is Meta the Meta platforms up there?
Okay, Meta. Give me your top three. Apple, Microsoft, Nvidia. Okay. Is that your order? All right, let's go. Let's see. So this is how you do the research real quick, right? So this is all you got to do, right? So you look up S&P 500 and put holdings. All right. So that basically just means what companies does this index hold? Okay. Go to good old Google. I like to use this website right here, Slick Charts. Okay. So you go to Slick Charts, and Slick Charts gives you accurate data and information. Apple, Nvidia, and Microsoft. So Khalif, you were the closest. I think I saw you say those three, but you didn't put that order. Fanta, you was kind of close too. Fonta, my fault. You was close. You was close. Amazon, Tesla, so that all right, yeah. So it's Apple, NVIDIA, and Microsoft. These are the top three in this index right here. Now, what you see right here, just to break it down, right? You see the company name, you see the symbol. These symbols just are basically called ticker symbols. This is the company's nickname on the stock market. That's all it is. All right. So Apple isn't called like Apple in the stock market. It's called AAPL. NVIDIA isn't called like NVIDIA. It's NVDA, blah, blah. When you see weight, this is telling you how much this stock is weighted on the actual index. Like how much weight does it actually pull? So Apple right now, being that it's number one, it holds the most weight. You know what I'm saying? Now all of these companies kind of at the top hold the most weight. So if like the top, like let's say 30 kind of are down for the day, that's going to cause the stock market to be down for the day. But let's say if Apple, Nvidia, like the top 30 are up, the 100th company being down isn't going to have such a huge impact. Does that make sense? So it's really about the companies with the most weight have the most impact. All right. So now let's we're going to scroll down here for like 30 seconds so y'all can become a little bit more familiar with some of these companies. And y'all can see companies that y'all familiar with. You got Costco here. You got Home Depot, MasterCard, Netflix. Anybody know what Procter and Gamble is?
And that's like the cleaning company.
Okay. Anybody know like a specific thing that Procter and Gamble has?
Unilever.
Okay, let me show y'all. Let me show y'all. A lot of y'all got Procter and Gamble in your house right now, right? Look up Procter and Gamble companies, right? Let's see. Look up. These are all the companies Procter and Gamble owns. I don't even know which one to pick on, right? But I will hope y'all clean your house, y'all brush your teeth, y'all wash your clothes. I hope y'all do that, right? They own most of the household essential items. You know what I'm saying? And most of the time we just see the brand, but if you look on the back, you'll see a little P&G. That stands for Procter and Gamble. So I want you guys to understand that almost 90% of the things that we use on an everyday basis is owned by a company on the stock market or it's traded by a parent company. So like Procter and Gamble is like the parent company and VIX is the company. You know what I'm saying? But we are familiar with the brands and we are using them every day. And nine times out of 10, we not just using it. Our friends are using them. Our parents are using them. Right? You know what I'm saying? So these are items in every household. You know what I'm saying? And no matter if there's a pandemic, no matter if there's anything happening, we still gotta brush our teeth. Some of y'all wasn't brushing your teeth during the pandemic. That's why y'all mask was stinking. I know, right?
Nah, what?
Is the I know.
Y'all don't gotta say too much, but I know. You feel me? But that's Procter and Gamble, okay? We got Bank of America, you got Coca-Cola for y'all soda drinkers. Y'all soda drinkers need to be healed. You got Walt Disney. So when somebody said Disney is on the S&P 500, but it's number 40. Um, let's go down. Let's go down a little bit further. So let's get to our 200s. We got Lululemon. See, Lululemon is a disease in the streets for y'all. It's a disease in the streets. Y'all gotta get rid of that. Discover. Um, let's go. Let's go down a
Yeah.
little. Um, Kraft Heinz. How many of y'all was putting ketchup on your hot dogs? Barbecue season is over. No more ketchup about to have a little season right now. No more hot dogs. Hershey. Carnival Corporation. Feel me? Uh, let's go down. So I'm trying to think of a company that y'all know down here. Assurant. I'm not sure if y'all familiar with Assurant, but when you lose your phone and stuff like that. Fox Corporation, right? How we watch our news, right? Everything is on the stock market, y'all. Everything. Ralph Lauren, the polo sweatsuits. Some of y'all boyfriends be wearing polo sweatsuits. You know what I'm saying? Let me see. Walgreens. And yeah. So yeah, I see it. And I know some of you guys may have the question of like you saw Fox Corporation at the top. So some stocks have different classes. So like if you go back to Google, let's go back to the top, right? So if you see like Alphabet Inc. Class A, Alphabet Inc. Class C, these are both Google, but the shareholders kind of represent two different things depending on which one you invest in. I don't know. I always forget off the top of my head, so I'm not about to say anything, but that's what that means. All right. But yeah, so Google is called Alphabet on the stock market. Facebook is owned, and Instagram and WhatsApp is owned by Meta, which is number 5. So when you really think about it, these top 5 companies are things that we use almost every day. So if we think of Apple and the iPhone, right? When we think of NVIDIA and the chips that go into the phones, into the devices, into a lot of these platforms, even gaming systems. When you think about Microsoft, Amazon, right? Meta platforms, right? We're on Instagram. Like I'm dead live on Instagram right now, right? Using Meta, right? So these are all platforms that we use every single day, and these are worldwide global platforms. All right. So that is the S&P 500. I'm gonna just show y'all the NASDAQ real quick. And y'all can always look at this on your own time. I know y'all won't, but I'll show y'all how to do it. You go to Slick Charts, NASDAQ. Again, on the NASDAQ, you already see the same companies, top 3. Same companies. You know what I'm saying? And then Dow Jones. I don't really look at the Dow Jones too much, but it is something good still to look at. So Dow Jones is a little bit different because they do the top like 30 companies. So Goldman Sachs is a financials company, United Health Group, healthcare, and they got Microsoft, which is a tech company, and they got Home Depot. Let's go back to the thing. All right, everybody get stock index. Y'all get it? That was informational. That was cool. Y'all got that? Y'all
Yeah.
here with me? I'm boring y'all, or y'all here with me?
We here.
Now we here.
All right. Somebody say you wear polo sweatsuits. In my past life, you see, nobody want to see you evolve and elevate. You know, like I'm just doing. All right. So now, bull versus bear. So how many of you guys see those lines in the stock market where it's be going up and down, or you'll see like red and green? Y'all seen that before?
Yep.
All right, cool. So I'm about to break that down to you. So whenever you see green in the stock market, that indicates positivity. That indicates it's going up, right? Whether that's an individual stock or that's the whole entire stock market, but that indicates it is moving up. That means it's in a bull market for that time period. All right. So a bull market happens when stocks are going up. And you are in a bull market when stocks are up 20% or more from its last high, right? So that basically means that if Apple was at 100 and whatever 20% of 100 is, I'm not about to do that math in my head and y'all say something. But whatever 20% of 100 is, if it's past that number or past it, that means we're in a bull, Apple's in a bullish state right there. All right. And think of it as a bull going up because when a bull attacks, bulls have horns. So it's attacking with its horns going up. You feel me? So that's all that means. Bullish up. That's all it means. All right. Now on the opposite end, we have when we see red, that indicates the stock market is going down or that individual stock is going down. So red means down. Green up, red down. Always remember that, okay? A bear market happens when stocks are going down and stocks are down 20% or more from its high. All right? So it's the same thing, but it's just going down. And think of it as when a bear is attacking, bears have paws. So bears are going to attack with their paws going down. So that's the difference between a bullish and a bearish market. Real simple. Right? They try to make these terms so that we don't understand, but we gonna get it. You feel me? I'll make sure y'all get the information y'all need. So that's it's real simple. All right. So green means what?
Bull.
Bull.
All right. Bull means what?
Going up.
Up.
All
More than
right.
20%.
All right. And then red means what?
Bear.
Going down.
More than 20.
All right. All right. Good job. Y'all wouldn't make a good chorus, but good job. So what causes stocks prices to go up and down? Noel, I told you I got you. So first things first, what we talked about before. Supply and demand. It's real simple. The more people are buying, that's going to cause the price to increase. The more people are selling, that's going to cause the price to decrease. Let's remember during the pandemic when everybody was buying toilet paper. Very stupid. Because more people were buying toilet paper, that caused something that used to be like 50 cents to now be like $1.50, right? Because the demand for it was higher. Now let's look at when a store says they're having a mass sale. That's usually because people aren't buying, right? So the price, the value goes down, the price goes down. Now, what causes this supply and demand shift? A couple of different things. One is, the company's performance, right? So when a company has positive news, so for example, I use this headline here where it says Apple stock hits record high on anticipation of AI fueled growth. So basically, they anticipated that Apple is going to do very well because Apple is going to start putting AI into their iPhones and into their products, right? So that's positive news. That's people anticipating that the company is going to do well with its products. So you know what people are going to do? They're going to stop buying, right? When a company beats earnings, let me explain that. Because these are publicly traded companies, they have to tell us, which us as in the public, how much money they are making. So you have 4 quarters in a business cycle, 4 quarters. So every 3 months is a new business cycle, 4 quarters. All right. So January to like March, 1 quarter, boom, 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 boom. You know what I'm saying? 4 quarters. At the end of every quarter, the company has to release how much they earned, right? On the stock market, you have some people called stock analysts. These analysts are people who analyze a stock, analyze a company. That's their job. And they basically create a number, right? That number could be $10 billion. They will say, I think Apple is going to make $10 billion in earnings this quarter. Apple then comes out with the earnings report. If Apple makes $10 billion or more, they made earnings. That's a positive sign, right? Because now people are like, oh snap, they made some money, they did well, they're gonna buy. If Apple missed earnings, meaning that they made less than 10 billion, people will start selling the stock because now people are fearful that the stock is not going to do well. So now that causes the price to decrease because people are selling. Do y'all get that? So news, earnings, new product launches, right? So like when Tesla released like new certain products, right? Or Apple releases a new iPhone. Sometimes that does well, right? But lately it hasn't been doing too well because a lot of the iPhones, as you can see, are like the same, right? So what the reason why this new iPhone did pretty well was because they said that they were putting the AI into the iPhones. So that created some type of difference, right? Now that caused the stock to actually increase. All right. And another thing that causes a company value to go up is just having strong financials, meaning that they are making money, they have money in the bank, they is overall just a strong financial company. Because when we're basically giving a company our money, we're basically telling them we believe that you're going to do the right things with this money, right? You're going to take this money and use it and invest it to grow the company. And if you don't have a strong financial background, my belief will go away. And then I will start selling my stock because I no longer believe in that company. Does that make sense? So that's company performance. So everything I just explained just now is what you call a fundamental analysis, meaning that we looked at the fundamentals of a company, and based off of those fundamentals, we said this will either be a good company to invest in or this will be a bad company to invest in. A technical analysis is when you see people looking at those charts, right? Where they look at the lines and they do all that and they sit in front of the screens all day. I don't got time to do that. So I do fundamental analysis, okay? Now, another thing, economic and political factors. Yanaya, are you on this call? Yes, Yanaya is still here. She is my politics friend.
I am here. I am.
Why are you yelling? Why are you yelling? Okay.
Sorry, can you hear me?
Don't get me tight. I can
Yeah,
hear.
y'all got me.
No, I'm playing. I'm here.
All right. But yes, Yanaya is my politics friend. She could attest to this. Politics impacts business, right? When certain laws are made, certain legislation is passed about something that could impact how people do businesses, how they do business. So, for example, if I am the government and I say you cannot use AI in the iPhone, that now would restrict Apple from putting AI into the phones. So now that can cause people to no longer believe in the stock because that was Apple's plan. Does that make sense? So legislation being passed that helps companies with their products can help a company grow, right? Because those laws basically are signing off saying that you are allowed to do this. That is why, give you a great example, Tesla has been going up a lot. Tesla has been going up a lot ever since we've been seeing Elon Musk hanging out with Trump and becoming ahead and things like that. That impacts Tesla stock because people know that Elon Musk is going to benefit off of those relationships, right? And Tesla and all his companies are going to benefit off of those relationships. And inflation plays a part. I explained to you guys earlier about how interest rates, the cost of borrowing money plays a part, and the laws being passed. Does everybody get that?
Yep.
You cooking right now. Appreciate that. Appreciate that. All right. Next is declines, right? So what causes the companies to go down? We talked about it. The poor earnings, right? So when they miss earnings, having high debt, that think about it. Would you want to invest into if somebody tells you like, hey, I'm starting a business. Can you invest into this company for me? But then you look at their portfolio and they got a whole bunch of debt. You're gonna be like, I don't think that's really smart because they owe a lot of money, and that's not a good sign. Scandals, right? Sometimes scandals can cause companies to kind of lose value because people start getting scared. People are scary. Think about it. If we got scared and bought tissue, just think about people with their money. They're gonna get scared about any little thing and start selling their shares, and people like to liquidate their assets, right? Liquidate. The reason why stocks is such a great asset to invest in is because anytime you want to sell it, you can. Anytime you want to liquidate it, meaning that to turn this asset into cash, you can do that. Versus if you own a house, you got to sell the house. That takes time, right? That's a whole process, right? It could take up to a year for you to sell a house. So it's not really a asset that has that much liquidity. But stocks, by a few buttons. You can have 100,000, right? I'm not sure if y'all familiar with Wall Street Trapper, but Wall Street Trapper is like a big time investor. His stock account had like $4 million in it. He needed to buy this investment property. He took $850,000 out of his account. One tick, $850,000. Transferred the 850,000 to his bank account and went and bought the property. That's real life. You know what I'm saying? Versus if he had to take money from one house to another house, all of that takes time. All right. So y'all understand what causes the stock market to go up and down?
Yes.
All right, cool. All right, let me call somebody. Let's see. What's the difference? Caitlin, tell me the difference between a bull versus bear market. So you're putting Caitlin on the spot now. Caitlin with the crickets. Wait, how 17 people get on this call? It was supposed to be, y'all snuck. Hold on. That's supposed to be 10 people. Bull is up, bear is down. Good job. Good job. Somebody, Mahawa. Well, I don't know Mahawa was here. Zakir, name the 3 stock index.
I told you in advance not to call on me. So,
You see that
but it's Dow Jones, the Nasdaq, and you lost me on the third one.
you right there. Somebody help out. We got the Dow Jones, the Nasdaq, and what's the last one?
S&P 500.
See, you lucky they like you here. You lucky they like you here. Good job, y'all. All right. So I know I just fried y'all brains, but I'm about to fry them some more. Now we about to get to the nitty gritty. how do we conduct a full fundamental analysis? How do you actually see if a stock is good or not? So I'm gonna explain each of these things first. Y'all can take out pictures, take out notes, whatever you have to do. Then we're gonna go to a website where we're actually gonna conduct the analysis. All right. So first things first, what we're looking for. We're looking for the revenue growth, right? Revenue is just basically money being made. So we want to see how much money are they making year over year? Did they make more money than last year? Are they growing? We want to see, is the company growing? Same thing with my company. Just how you treat it, how you'll treat your own company. With my company, I have to see, how much did I make in 2022? How much did I make in 2023? How much did I make in 2024? And then based off of those different jumps, I make my projection to say, this is how much I can expect to make for 2025, right? So I want to be growing. You want to invest into companies that are growing, right? A lot of times companies at the beginning stages, they're losing money, but it's okay. You want to see the growth, all right? Now, profit margins. Profit basically just means how much money are you taking home, right? So if I bought something for $10 and I resold it for 15, I took home $5, right? So you want to be able to have a large enough profit margin. Is this company keeping what it earns? Because somebody could say, I made $1 million last year. But if it cost you $1 million to make that $1 million, you didn't take anything home. If it cost you $5 million to make 1 million, I don't care about the million that you made because you still lost $4 million, right? I want to see, are you profitable? Is your company actually making money and taking money home? So we like to see 10 to 20%. Does that make sense? Next is debt. Does this company owe too much money, right? So think about it when you are buying a car. Let's look at it as personal, right? When you're buying a car, they like to ask you, what's your debt to income ratio, right? Meaning that how much debt do you have versus how much income do you have, right? So if you owe 500, but you only make 200, you have more debt than income. That's not a good sign, right? So when it comes to companies, we like to see their debt to equity ratio, right? And you get all this information online and you want it to be lowered into. I'm going to show you guys how to do all that. I'm just explaining this. Next is competitive advantage. You only want to invest into companies that have a strong competitive advantage. You don't want to invest into a company that has a lot of competition because that means that the company is not that strong of a company. You want to invest into companies that they're the top, they're the head in their industry, right? So when you think about Apple, right, you think about maybe Android, but you know more people with Apple iPhone. When you think about NVDIA doesn't have strong, they have competition for sure, but they don't have a stronger competition than themselves. They're the top in their industry, right? So when we think about these things, that's what's important. When you think about Amazon, yeah, we have Walmart, but Amazon is still a leader in the online commerce space. Does that make sense? Right? So that's what makes these companies so valuable. And every company I just named, they're the top in their industry, right? Then we want to look at the short ratio. I don't know why this wasn't my fault, but basically, how many businesses or people are looking to actually invest in this company going down. That's what short basically means, right? To short something means that you think this is going to fall, right? So you're investing in the hopes that this is not going to do well. So if the short ratio is very high, that basically means that a lot of people believe that this company isn't going to do well. Leadership, that's another big thing. Does this company have good management? So for example, Nike, we see Nike every single day. There's not a day we could go without seeing somebody wear Nike. I'm pretty sure everybody in here owns a Nike product, whether that's a shoe, a shirt, or something, right? But Nike doesn't have good management. So the company is not performing well on the stock market at all, right? So now, based off of this information, we about to do a little analysis real quick, right? So y'all can take a picture of this, but I'm about to show y'all all this right now. So a website I like to use is called Yahoo Finance. All right, so you just look up Yahoo Finance, put in Yahoo, And we're gonna do some research on Apple today. Everybody fine with that? We cool? Because I feel like Apple is a company that everybody's kind of familiar with. Everybody cool with Apple?
Yeah.
I'm sweating in here. I should took my hoodie off. It's hot. All right. Next, so first things first. We came on. Well, I was moving too fast. Hold on. First things first. We come on Yahoo Finance. All right, let me go back. You don't see all these news, blah blah blah. We don't care about this. Well, you could look. It's good stuff, right? But we don't care about this. You type in AAPL, you'll see it pop up. Apple, click on it. Cool. Boom. First things first, you'll see all this stuff. Now, how do you manage this stuff? What does this stuff mean? Let's break it down. First things first, we see the company, Apple Inc. That lets us know we're looking at the right company. Remember, who remembers what this is called? What is this?
The ticker price.
Ticker symbol. You right there. You right there with it. I believe in you. You got it. Ticker symbol. All right. Next is this big bold number right here. This says 248.13. This tells you how much it costs to buy one share of Apple. So if you wanted to buy one full share of Apple, it will be this price right here. This is what this means. During the day, you'll see these numbers moving in real time. This is what this in real time. You'll see these numbers moving. All right. Now, what are we looking at right now? If you put it on 1D, remember 1 day, blah, blah, blah. All-time high. So all-time high, Apple is up 193,000%. It's crazy. So we're looking at it from the 1 day right now. Zoom is in so I can see. Previous close. Previous close means what is the last price that this stock closed on? The last price that you could buy that, right? That's 247.96. That's what it means. Open means the price that it opened at, 247.88. Simple. Bid basically just means how much people are willing to buy this for. Like, what are they bidding on it, right? So, like, when y'all be on eBay placing y'all bids, I know I'm on to y'all, right? I know it's no different from what you're doing in real life, right? When you're on eBay placing your bids, you're basically saying how much you're willing to actually buy this product for. Then you have the seller who's basically having an ask price. How much are they willing to sell this product for, right? So 235 is the bid, 248 is the ask, but this doesn't really matter when it comes to long-term investing. I just want to let y'all know what it means, but it don't matter. Days range. This basically means the lowest price it hit for the day. So everything we're looking at right now is based off of Friday, because remember the stock market is closed. So everything we're looking at is from the previous trading day, which was Friday. So the lowest price it hit on Friday was 246.24. The highest was 249.29. As you can see, Apple doesn't move too much in a day. You know what I'm saying? Like, there's only like $3. It's not too much. So you're not going to care about $3. This is why you got to hold for the long term, right? Because in a long term, it moves, but on a daily, it doesn't move too much. Now, 52-week range. How many weeks are in a year, y'all?
52.
All right. See, y'all smart on here. 52 weeks. So this basically just means the lowest price it hit in the whole year and the highest price. So the lowest price Apple was at was 164 for a share. The highest price was 250. Now, why does this matter? If we go back to how much it costs us to actually buy Apple right now, it's 248. So that means it's only $2 away from its highest price. So do you think it would make sense to invest in Apple right now? Yes or no? What y'all think?
No.
No? Why?
Because it's too close to the highest. Like, basically the intention is to invest when it's lower so you can increase your profit.
Exactly, right? Yep. See, y'all don't need me. You feel me? I got it. You get it? Right? It's high. You never, if y'all don't take anything away from this class, you never want to invest into a company, a stock, anything at its highest price, right? Because that's like you don't want to buy its item at its highest price, especially an asset. You want to be able to buy it at a low price so that it can increase and then you can sell it at a higher price, right? It's too high right now. Too many people are invested right now. It's going to come back down. It is. You may feel like no, it's going to go up, and it may go up a lot before it comes back down, right? But it's going to come back down. Everything that goes up must come down. But you never want to invest at its highest price, okay? And this is a great way for you to see, like, if somebody tells you, like, yo, you should get this company, blah, 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 and you're thinking about it, you do some research, and you're like, okay, I think I should get it. This is the first thing you want to look at, right? How close is it from its highest price? Because if it's too close, now isn't the time. I could invest in it, but just not right now. You want to wait until it gets 15% to 20% lower than its high. So how do we do that math? Real simple, right? You go to Google Calculator. I'll put in 250. You don't got to put in like the cents. That don't really matter, right? I'll put in 250 and I'll do 250 times. I like to do 20%. 250 times 20%, that tells you 50. So that you do 250 minus 50, real simple, and you get 200. And this lets you know, okay, when Apple gets to around 200 or under 200, that's a good time for me to buy in again. You know what I'm saying? So you just never want to, and then as it goes up, oh wait, hold on, my fault. Yeah, as it goes up, because it can hit 255 by Wednesday. So that means you got to redo the numbers, right? So as the 52-week range continues to increase, you have to go back down. All right. So that's a good way to see it. Now, volume. Volume basically just means how many people actually like bought and sold, right? How many people are actively like trading and investing in this company right now. So this is letting you know the numbers here. Why is somebody opening my door in a sneaky way? Oh, hello. All right. Market cap. Average value, my fault. Average value just tells you the average of how much they usually get, right? So as you can see, the volume is lower than the average. All right. Next is market cap. Market cap basically tells you the value of the company in a way, right? So what this basically means is how many people bought the stock, right? Actually, like own the stock right now, times like how many shares that are sold, times the stock price, right? So basically, this 33 million number right here, right? Times the 248 gives you, hold up, this $3.75 trillion number. Does that make sense? So that's what market cap. It stands for market capitalization, right? Now, beta tells you how risky a stock is, right? So how much of a risk it is to actually like invest into the stock, right? So that's what the beta means. And the PE ratio, right, stands for price to earnings. All right. So this basically tells you basically how much, I want to explain this correctly for y'all. Hold on. Hold up, hold up, hold up. Hold up. Hold up, hold up, hold up, hold up, hold up, hold up, hold up. What's this? All right. So price to earnings gives you the financial metric used to evaluate the company's stock price, right? So what I mean by that, because it gets real technical with this, so I gotta make sure y'all understand this. All right. So what you're basically looking at is, okay, the stock price costs this much. How much are they earning off of that stock price? Does that make sense? Y'all get that? Oh, y'all confused. Y'all can tell me if y'all confused.
So when you say is how much you're earning, is that like I don't know, like is it the profit? Like I need you to
So
clarify.
it's not for us. This is not for us. This is for the company, right?
Okay, okay.
PE ratio tells us the price to earnings, right? So basically, how much of the price, the actual stock price, to the actual earnings, right? How much are they earning based off of that? Because, all right, if I invest my 248 into Apple, right? they're actually making money off of that. Like that goes to the company. They take the 248 and they use that to invest into, let's say, iPhone material to make an iPhone, right? So the price to earnings is how much of the price, the stock price, do they earn? Does that make sense?
Okay. It's like a fraction of what you're
Yes.
investing.
Yes.
Okay.
Yep. Right. And then you have earnings per share. This is basically now that they made the money from the earnings, how much of that do they take home? All right. So that number right here is 6.8. So $6.08. How much do they take home? Does that make sense? All right. And then you have earnings, right? Remember I told you guys every four 4 quarters they have to release earnings. Not every four quarters. Every quarter, right? There's 4 quarters, and every quarter they have to release earnings. Now, the next earnings date will be between January 30th to February 3rd, because that they'll be reporting earnings from this last quarter, this last cycle. All right. Then we have dividends. Remember, I told you guys about dividends. This tells you Apple pays right now $1 per share for dividends, and then the yield is basically just the percentage, right? So out of this 248, 40% of that goes to earnings. I mean dividends. All right. And then the dividend date, if you were investing into Apple, November 8th, you received dividends. All right. And then the 1 year target basically tells you that they were looking at Apple to get to 245 in a 1 year. And look where it's at, 248. All right. So it's pretty positive towards Apple. Y'all got everything I just explained? Everything made sense? All right.
Yeah.
So now everything is here. Y'all take a picture of it so that y'all could kind of like see its review, because I know I just bust y'all heads. Yeah, it's quiet now. It's real quiet. Niggas probably sleeping. Y'all sleep? Noel, you up? Fonso, you with me? Aaliyah, you with me? I know Janaya here. Janae, you with me? Zakia,
I'm here.
I'm
I am
here.
fully here.
Yeah.
We're here.
all right, good. All right. I'm making sure y'all still here, because
Locked in.
Yes, we're still here.
all right. I know that's when it get a little tricky when we looking at the numbers, but all of this stuff means something. And if once you kind of understand this, now this will be a good metric for you to kind of see like when to kind of get into a stock. But the main focus right now is once you get your top 3 stocks, right? Which I will tell y'all how to pick like those top 3 stocks, right? I'll like focus on the top 3 stocks, right? That we saw. Now you understand the 52-week range. Now you just know when to get in. You know what I'm saying? And once you have that, that's a constant measure that you can use to get in. All right. So let's get back to it real quick. All right. So now, remember when I was telling you guys about the revenue? How do we check the revenue, right? So first we can look at statistics right here on the side. If you just click statistics, if you click that, you'll see all this information here. So this is telling you like quarterly how it's been doing, right? Let me see. Let's look on Morningstar real quick. Hold on. All right. So Morningstar is another platform that you could look at to free platform that you could look at to get data about a company. And all of this basically tells you the data of a company. Right now we're looking at annually. So this is basically means every year. So as we can see, 2022, 2023, 2024, boom, 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 right? So right here we're looking at the income statement. The balance sheet basically tells us like how much money, assets they have, right? So that's money coming in, liabilities, money coming out, cash flow. This is basically telling us the cash flow of how their money is, things like that. What we want to look at is how much assets do they have and is it growing? So as you can see, in 2024, they kind of made a comeback. In 2023, struggling a little bit, but they kind of made a comeback. And a good thing you always want to look at too is remember the sectors. Remember I told you guys about the sector. How is a sector performing, right? Because if we just look at one company and we say Yeah, Apple's doing bad. I don't think it's going to do good. But the whole sector itself, the whole tech sector, wasn't doing good. That basically kind of tells you like it's not just Apple. You know what I'm saying? So it's like I'm gonna bring it back to school. If you and all your mans, the whole class failed the test, that kind of shows the teacher like, okay, something happened here. But if majority of the class passed the test, but like two, three people failed, that speaks to that one, that those two, three people, that those two, three stocks. But if the whole class failed, that speaks to that whole entire class, that whole entire sector. Does that make sense? All right.
Yeah.
So when you go on Yahoo Finance or Morningstar, all this information is here. You could look on financials. When you look on financials, again, you'll see the income statement. But right now we're looking at annually. So that's year. If you look at quarterly, that's telling you how it's grown off each quarter. So 2021, as you can see here, was at 365. I'm not reading out the whole number. 2022, I went to 394, right? But then you have to also like pay attention to what's going around you during those times too. So if you remember 2021 pandemic, 2022, remember still that pandemic time, everybody was getting that free money, buying the new phones, all that. 2023, life happened again, right? Things got real again. No more crab legs. See all them crab leg spots, they started closing down during 2023. You feel me? 2024, we started recovering a little bit. Also what's factor into this is also like the election and all that stuff, right? And this is what we want to see. We want to see growth over time. Like there can be some decline sometime, but growth. That's what we constantly want to see. Is this company growing? All right. So what we were looking at was just the total assets, but when you could look at all these things, but the main thing you want to see is like, are these numbers going up or are these numbers going down? All right. Um, that's the I don't want to bust your heads too much, but those are the key things to look at. All right, let's get back to it. So that's Yahoo Finance, top two things. Any questions about that?
Nope.
So y'all understood every single thing I said just now.
Too much.
So just Janai understood. I
You
know
know,
some.
if I don't get it.
All right,
I feel like we have good examples, so
all right, but
Hey, the analogies have been really good. Like you're basing them to real life. I mean, it is real life, but you're basing it to good examples that make us understand it.
all right, bet. Gotcha. So now, like, what do we invest in? How we invest? Blah blah. So let me just break these three things down, and then we'll get to that. So you have ETFs, index funds, and mutual funds. All right. When you're starting off investing, sometimes it may be a little scary to get into individual stocks because you're basically when you invest into an individual stock, you're investing into like that one company and that one company only. But when you get things like ETFs and index funds and mutual funds, you're kind of investing into like groups. So let me break down each thing. ETF stands for exchange traded fund. I myself are invested into some ETFs. All right. So think of an ETF as like you own a mall where each store is different. You know what I'm saying? But you own the whole entire mall, but there's different stores. So that's like owning, right? Uh, a fund, but then they have a whole bunch of different stocks in it. That's what that is, an ETF, right? So you invest into many companies at once. All right. So the benefit of investing into ETFs, they're low cost. You get to diversify your investments, meaning that you get to not just invest into one thing, but you're investing into multiple things and you can buy and sell it. All right. Next is an index fund. I myself, again, I'm invested into index funds. Index funds are very similar to an ETF, but index funds, they kind of mirror the index that we were looking at. So like there's index funds that mirror like the S&P 500 or mirror the Nasdaq or mirror, excuse me, the Dow Jones. All right. So that's really what the main difference is. And it kind of trades just like a stock. All right. So it's like you own small parts of each of the 500 companies, right? That's what the index fund is. All right. I like index funds again because for the same reasons, they're low cost. You get to diversify your investments and buy and sell. Then you have mutual funds, right? Mutual funds are for old people, okay? None of y'all, everybody over here is under 30. Come on now. Don't like it's real safe. It's real slow investments. I tried the whole mutual fund thing, but it's like if you got Apple making 30%, why would I invest into a fund that's only making 10%? You feel me? Like, yes, my money is growing, but we young. We could be a little bit more risky. We risky anyways. When we be taking people out and they don't be the one, that's a risk. You feel me? Right? Some of y'all done bought y'all Christmas pajamas and all that, but y'all arguing right now. You feel me? So that's a risk. You feel me? So if we can risk our money on other things, we can risk our money on investing in ourselves. Okay. So a mutual fund is like a pool of money being collected from many different people that goes into like one portfolio. So that's like if everybody on this call gave me $30 and we put this fund together and the fund kind of grows in value based off of what it's invested in. You know what I'm saying? That's a mutual fund. All right. So based off all these, you can invest into all these different things, but I would recommend ETFs and index funds when y'all start out. And I'll show you guys which ones, blah, blah, blah. So we here, y'all. We made it through. We got to the information. We did that. Now we about to get into how do we actually invest. All right. So I don't know if y'all on your phones, on your computers or whatnot, but y'all, each of y'all leaving this call with a investment account. All right. Each of y'all. It's free. It take 2 seconds to make it. Each of y'all. So first things first, you need a brokerage account. This is the account where you buy, sell, and hold your stocks. So think about this like your bank account, but for stock market. So with a bank account, you put your money, you hold your money, you save your money, right? It protects your money. Same thing with a brokerage account, all right? Now, a taxable brokerage account is basically just a regular brokerage account. That's an account where once you take your money out, you got to pay taxes on it, right? You can invest freely. You could buy, sell, and let me give y'all a tip real quick. If you want to pay less money in taxes, invest your money. That's what rich people do. They invest their money and they pay less money in taxes because they're not showing that they actually made money. They're not realizing their income, right? When we go spend our money, we have our money into other accounts that's showing the government that we have money. But when we put it into these investment accounts, the money can just grow. All right. Retirement accounts. So once we have our regular brokerage accounts, you can get what you call a retirement account, right? So what I would recommend for you guys is to get a Roth IRA. All right. You also have traditional IRAs, but I would say get a Roth IRA. IRA stands for individual retirement account. So if y'all work right now, y'all probably have like a 401k, right? Now that's cool. Yes, you're saving for retirement, but still think about it. Still, your future is in the hands of somebody else. Your future is literally still in the hands of everybody else. And to make y'all feel bad about yourselves too, if you do have a 401k, a lot of y'all pensions and 401ks invest into private prisons. So that means if you want to do a good duty and invest for yourself, you get yourself your own Roth IRA on top of the 401k. You feel me? Because a lot of times your employer will match your 401k. So you don't want to take away from that bag. Get that bag. But what I'm saying is you want to get your own investment account for your future because your future needs to be at your own hands. You don't want to have your money wrapped up with somebody else, right? So a Roth IRA is tax-free, right? That's tax-free when you take your money out in retirement, right? So that's when basically you're getting taxed now. That's what that means. You're getting taxed right now. So basically you work, taxes come out your check, you take that money and you invest it into stocks. So that's the Roth IRA. A traditional IRA is when you pay taxes when you take the money out. The reason why I would say get a Roth IRA is because as we get older, I will hope we make more money. So we want to get taxed less as we make more money. Does that make sense? So that's why you would get the Roth IRA. And you could put up to $7,500 in your IRA, in your Roth IRA. All right. So now, how do we set up the brokerage account? I encourage everyone to use either Fidelity or Charles Schwab or E-Trade. I myself, I use Fidelity and I use Charles Schwab. Who on here does not have an account? Be honest.
I don't.
All right, so we about to get that done. All right, I'm about to give you the steps. So first things first, you go to fidelity.com. Give me out the process. And you'll click on open an account. Okay. You'll click on brokerage account. Okay. It's completely free to set this up. I don't get paid by Fidelity. I wish I did. I'll really brag about it a little bit more. But I don't get paid by none of these companies. I'm just trying to put y'all on. All right. Are you already Fidelity customer? You click no. It's not going to let me go through the whole process, but it's just like opening up a bank account. All right. So they're going to ask for your social security and all that, but that's just because they have to make sure you are who you are. They're going to ask you, will this be an individual or a joint account? You'll put just for me. You'll click next. And then you put all your details. All right. So that's Fidelity. Cool. If y'all want to get Charles Schwab, I know y'all probably asking me which one is better. Go with Fidelity. Just because Fidelity allows you to do fractional sharing, meaning that you can buy, if Apple is like $100, you don't have to buy the whole $100. You could buy $25 or $50. You know what I'm saying? So with Charles Schwab, you just go to open account. You'll click individual. Wi-Fi slow. And then you'll just go through this whole entire process. Boom, boom, boom. Completely free. Takes about, I'm not going to say 30 seconds anymore, but like 2 minutes. 2 minutes, real quick. All right. So as y'all doing that, I'm going to explain this, right? So once you create the account, let me show y'all what the inside of the account look. Everybody in here family, okay? So I'm going to show y'all my stock account. But this, you feel me?
In it clear, we all fam.
Feel me? Exactly. We fam. I'm showing this so that y'all could see like what it look like, and I could break it down to y'all how y'all do this. All right. Hold on. All right. So this is what the inside of Fidelity looks like. Okay. So when you first come in, you're going to see all your accounts. In most cases, you'll have one account. Okay. So if you get multiple accounts, you're going to see all accounts like added together. Boom, boom, boom. All right. Now, the balance shows how much you have in that account. So if you upload $100, you're going to see a balance of $100. If, let's say, you invest into a stock and it went up $50, you're going to see 150. So the balance shows your total of investments plus cash, anything that you have. That's the total. All right. So this just gives you a summary, right? When you click on like 1M, this is basically telling you like the 1 month track, right? So like the beginning of December, the beginning 1 month ago, basically 30 days ago, I had 15,000, right? And then boom, boom, boom. That's what it shows you. YTD again shows you January 1st, boom, boom, boom. 1 year, 3 year, cool. All right. Positions, right? So when you look at positions, hold on. This is going to tell you basically, hold on, let me do it based off of one account. Hold up. Hold on. Counts. Individual. Okay. All right. So as you can see, whenever you see like today, so this is telling me like today, not physically today, but the last time the stock market was open, Friday, I lost $34, which was a 35% decrease, which you're not mad at because again, remember the stock market goes up over time and I still made money over time. You know what I'm saying? So don't get caught up. I don't look at my stocks every day. I probably look at my stocks probably like 4 times out of the month, once a week maybe. You know what I'm saying? And like that's just little quick news I may see and things like that. But you don't have to be a fanatic about this. When you first start, you definitely gonna be checking. You're gonna be like, yo, let me see. But it don't matter, okay? Now, when you click positions, this is basically telling you the overall of everything you're invested in. This is how you see like what are you actually invested in, right? So if you, as you can see, I have like Apple, Amazon, GNL is a REIT, right? Google, I have Eli Lilly, right? Nike, see? Point of view. Look how much money I lost off of Nike, $95. I got it a long time. Nike has is trash, it's doodle. All right. So now what are we looking at here? Okay, so this is what's important. So when we see today's gain, this is telling you how much you made today, right? So the honest truth about investing, when you invest with pennies, you'll get dollars. When you invest with dollars, you get a few more dollars, right? When you invest with thousands, you get a few more thousands. When you invest with tens of thousands, you'll start getting 100,000s. When you invest 100,000s, that's when you'll start getting millions. You get what I'm saying? So it's levels to it. So you can't expect to be investing $20 and be like, I only made $5. You only invested $20. You know what I'm saying? Like, so when you invest low, the return is going to be low. However, remember what I told you earlier. 33% is 33%. So the more you plug in, that's the more money you'll make. You get what I'm saying? So now, total gain is letting you know what's the total amount you've made since you owned the stock, right? So like, as you can see, these are the total amounts. So I lost some on some companies, like I said, Nike, but majority is up. So this total account is up about 60%, right? So that is letting you know this how you able to have a benchmark to see how are you performing, how your stocks are performing. That's very important because you don't want to just be investing and like losing. You know what I'm saying? You want to be able to see like, am I doing well? Blah blah blah, right? Current value. This lets you know how much was in total do you own of that stock, right? How much do you have in that stock? All right, that's what the current value tells you. Account percentage. This lets you know how much of this stock is weighed in your account. So think about this as like your little index, basically. This is an index of your stock portfolio, right? So as you can see, I'm heavily into Apple with this account, right? So quantity just tells you how much of this stock you own, all right? And all this stuff is different, all right? So that's the most important thing. And when you scroll all the way to the bottom, this right here tells you today how much you lost. Remember, we looked at a number before. This number right here tells you total. This number right here tells you how much this account is actually worth. So if I was to sell all my stock in here and all the money that's in here, it would get that much money. Does that make sense? So that's what these numbers are telling you. Now, how do you actually go invest into a stock? All right. So you'll go to, well, first things first, sorry. How do you put money in the account? It's first things first. First thing we need to do. So you click on accounts and trade, right? And right now I'm doing it on a computer, but it's kind of like the same thing when you do it on an app, okay? So you click on accounts and trade and you'll go to transfers, right? So now you'll see all these options. First thing you want to do is link a bank, right? And then you'll click EFT. That basically means you're transferring electronically. You know what I'm saying? For yourself, is this a business bank account? No, right? You want to log in and then boom, boom, boom. And y'all know this whole process, right? Right, you just go through the steps. It's real simple. Just go through the steps and you'll basically sign in into your bank account. And then the bank account will basically transfer the money over and you'll put how much money you want to put. Now, you could set up recurring transfers. Okay. So, for example, me, I have all my stuff set up. So every month, I automatically buy for my Roth IRA, I automatically buy $50 worth of Eli Lilly. $50 worth of Microsoft, $50 worth of SPY, $50 off of all these stocks. I buy $50 off of all these stocks every single month. This is like my investment strategy for this. So I do what you call dollar cost average. So dollar cost average means I'm not waiting for a stock to fall down to invest, right? I basically invest every single month a little bit at a time, and I take advantage of it going up long term. Because for this specific account, I'm expecting to hold this for like 10 years, right? My brokerage account, and then my Roth IRA isn't until I'm freaking 65. So I got like 40 some years with that. You know what I'm saying? So when you think about that, in 40 years, and then as I make more money, the $50 is going to turn into $100 per stock, 200 per stock. So think about that. As you invest more, you're going to make more. All right. So I basically set up this to automatically, because I'm busy during the day, right? I'm busy during the months, right? So it's like I don't have time to be checking my stocks all day. I don't have time to be uh holding myself accountable to make sure I invested every month. So what I did was every quarter I'll go in and I will plan the investments and set up the recurring activity so it will automatically take it out my account. I see some questions in I got Charles Schwab and I hate that they don't do fractional shares. Yeah, I have Charles Schwab too. And yeah, they don't. Janai, was good.
So my question, you know how you said the max is 7,500 that you can invest into that IRA?
Mm-hmm.
What happens when you've hit your max? Do you are you able to make another IRA account or
I don't think you can make another IRA. I think you can make a traditional, but then
okay.
taxed when you take the money out. But that's why I
Mhm.
said with the brokerage account, that's why I have these three different accounts, right? So
Uh-huh.
the next part, I know we've been on here for a while. I promise you, we're gonna be off soon. I just want to get this way out. But the next part, I was gonna show you guys like your investment strategy, right? So how to kind of
Mhm.
create a strategy. So each account I have serves a certain purpose. You know what I'm saying? So
Yeah.
for example, right, just so that y'all can kind of understand it. So the first thing you see, I'm gonna do the individual first. So my individual account, I created this account when I first turned 18. My goal with this account was I wanted to do something that would make future Aaliyah happy, right? So I said 10 years from now, I want to be able to look back and say like I did something or I invested in my future. So this is money for like if I want to buy a house when I'm 28 or if I want to invest into another asset or like just to have something that I've grown for 10 years. You know what I'm saying? So that's the goal with this account. A joint account is an account I created with my dad because birthdays come, Christmas come. I stopped asking for sneakers and money and stupid stuff. I said like I want put money in my investment account and things like that. And every month I put money into this account as well, right? And the goal is like we get older now. Like, you know what I'm saying? Like we need to no more stupid stuff. And that's if your parents are still willing to invest in you or whatever, this is another way to kind of just grow your money. All right. My crypto, I got very, very little crypto in here, right? But little some. That's just because I'm getting in the crypto game. My Roth IRA is for retirement, right? So I came to the conclusion that damn, I work for myself, and I really don't plan on working for anybody anytime soon. So that means that I gotta retire myself. I don't know what age I want to retire at. So I said I have to start doing that for myself. Same way a job would sit you down and say like, you know, these are the 401k options. I had to sit myself down and say, okay, how much are you going to invest in monthly? Right. So that is the point of these three different type of accounts. Right. So you guys have to create a strategy of what are my goals? What do I actually aim to do with this? You know what I'm saying? And to be realistic with you guys, at the start of this year, all these accounts were worth $10,000. All of these. Now, by the end of this year, it went up about 6,000 and some change. You get what I'm saying? And I opened up another investment account where I didn't even put too much money into this account, but it still grew, and I didn't have to do any physical labor. You know what I'm saying? So this is money that you can still make without doing like anything physically. You still could work, you still could go out, you still could go on vacation, but like you still have to invest for your future. You feel me? And I just don't know any other way for you to make money this easy without having to do hardcore labor. You feel me? So that's that. So that's how you transfer money into your account. You can set up the recurring payments, figure out what amount is reasonable for you every month, do it, set it up so it happens automatically. You don't have to forget 1 month. Like I can't forget because it comes out. You know what I'm saying? It's just like how Apple don't forget to take your bill, to take your bread. They don't forget. You
Yo,
got,
don't get me started about Apple. They'll take
bro,
your ass.
they, Apple don't forget. They don't care if you got $10, $20. They gonna take the bread and put you in the negatives. You gotta think the same way. You gotta be that serious about your future as well. All right. So now, how do you buy the stock? So on you'll click on trade. You put the account that you want to buy it from. I don't really remember, it buys it on its own, so I don't really keep too much money in this account. Let's say you wanted to get Apple, you'll put AAPL. All right, all the information about it comes up. You'll click buy. And then if you're not buying a full share, you'll click dollars. And then you could put $5. You could put 10. You could put 100. You know what I'm saying? You could put 200, right? You could put 1,000, right? And whatever amount that you put, that's what you put. So let's say you did $50, right? I'm not going to actually place this trade. Well, I can't. I only got $22, but so then you'll click market or limit. Market basically means that you're buying it at this current price that it's at. That's what market means, right? So if it's at 248 and the market is open, you're buying it at that live price. Limit means that if you click limit, you're buying it at a price that you want to get it at. So if let's say you're like, I want to buy it when it hits 245, right? Or remember, we said we wanted to wait till Apple went down to at least 200. You can plan that. You can say, I want to wait till it gets to 200. And you click limit. You click the preview order, and it will go boom, boom, boom. It's not going to let you buy it now, right? But that's how it'll work, right? And then after you click preview order, you got to make sure you click confirm, right? Because if you don't click confirm, it won't go through. Got it? Cool? So that's how you place a trade. Who said they had Charles Schwab on here? Anybody signed up for Charles Schwab? Kylie, you had a question?
Yeah, sorry. So what you just showed us, the trading, how is that different from, and I don't even mean to sound stupid, but how is that different from transferring the money the other way that you showed us? Like, what's the
So,
difference?
so when you transfer the money, so all right, let's imagine you just opened this account. You just opened this account. You have $0. You don't have no bank link to it. You don't have any money in it. You have to put money in the account for you to actually be able to buy a stock. So that's like if like you had Sheen, right? A Sheen account or something like that. And in order for you to buy on Sheen, you have to upload money to Sheen website. That means you have to link your bank account to Sheen website, deposit money on that website, then you could be able to shop. That's how this is. So you have to link a bank account, put money in, transfer money. Let's say you transfer $100. Now you'll be able to buy $100 worth of stock. So you can do 50 in Microsoft, 50 in Tesla. You can do $25 in 4 different stocks, right? But you have to put money in the account first. Does that make sense?
Yes, thank you.
So that's the difference. So first step is putting money on. Second step is then investing. If you just link your bank account and put money in here, that doesn't mean you're investing. That just means that you have money in a brokerage account. Investing means that you own stocks or whatever. All right. So remember when I told you guys earlier about the ETFs? Here's an ETF that kind of mirrors the S&P 500. Yes, I know it looks a little pricey, right? But one of them is called SPY, right? So SPY is 600. Sorry, y'all. When I put my hat backwards, I gotta get my bag. SPY is $604, but again, remember you could buy $100 worth. You don't got to buy a whole stock worth. But this is you basically investing into the S&P 500, not like one stock and one stock only. All right. Who said they had Charles Schwab? Anybody signed up for Charles Schwab just now?
Fanta.
All right, bet. So just to show y'all how Charles Schwab work, it's kind of like similar, but Charles Schwab is a little different. You can't do fractional sharing on Charles Schwab. Like you can't get like $100 worth of a $200 stock. I don't like Charles Schwab for that. I called them and everything. I was like, yo, like Fidelity better than y'all. She didn't like when I said that. Hold on, let me put this code in. Y'all here with me or y'all sleeping? Y'all good? I know it was long. Got a couple more minutes. All right, so Charles Schwab is the same thing, but it's a little different how it's set up in terms of this part right here, right? So just understanding what this means on Fidelity, that it's kind of the other way around. Charles Schwab, this is how it reads. It tells you the stock you're invested in, then it tells you the quantity, right? So it tells you how much of it you have. Then it tells you the price of that stock. It tells you this is the how it's been fluctuating up and down. It tells you for the day how it's been going down. So stocks have been going down or not. And then it tells you total gain. So this is my risky account. I take a little bit more risk in this account. So that's why it's a little bit more tricky here. All right. And this tells you your total gain. All right. And then it breaks it down from individual stocks to ETFs. All right. When it comes to putting money in, you got to click move money. You got to click transfer and payments. And then always do the online transfer, okay? And if you ever want to see, because sometimes the question is, how do I see if my money, where do we find the average cost per share? What do you mean? Taiwan Gordon, who's this? What up? How you doing? Where you come from? I knew some people snuck on here. 'Cause I'm like, there was no way it was all these people on here.
Hey,
Not too
yeah.
much.
Okay, my bad. Now I was trying to find like you know how you buy a share, right? Like on Fidelity, it'll say if you bought one share for $100, your average is $100 per share. On Charles Schwab, I'm just having trouble.
Okay, let's see. Yeah, it's a little different on Charles Schwab. So summary, boom, 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 boom. Boom. I know exactly what you're talking about too. Let me see. I don't know if they tell you that. Some like Charles Schwab is just a little different. That's why I told all y'all to get Fidelity because it's just set up. I think Fidelity to me is a little bit more user friendly, where like it really tell you, a little bit more. I don't think it tells you. You might have to actually call. Sometimes I'll be having to call and get certain information from them. But yeah. So these are all my like risky stocks. So I try to do this was like a cannabis ETF. I try to do some stuff, but it didn't really work out in my favor. But this was back when I was like 3 years ago. I was first getting started. Back to where we were. But yeah, Taiwan. Did I say your name right? I hope I did. You
Yeah,
have
you
to, you
got
might
you
have
got.
to, yeah, you might have to call them. But again, that's why I said like I really would prefer for you guys to start off with Fidelity because it's real simple, user friendly, easier to understand. Charles Schwab, they be tweaking a little bit. All right. Now, a question I always get is how do I see if my money went through or if like this worked out or whatever? All you have to do is look at recent, and this will show you like your recent activity, right? And then it'll show you what your like future plans are or whatever. And you can change like whatever it is. You do 90 days, whatever. Cool. And that's how you can tell like if it's been taking the money out. Realized gains and lost will basically just tell you if you bought like any stock or anything like that. Only thing was super micro where I got out of it because I'm not doing too good. So that's Charles Schwab and Fidelity. Y'all got that? Simple. That's what it looked like on the inside. Y'all cool? Now, just to go over these things real quick so I get y'all out before 8 o'clock. How much of your income should you actually invest? So it really depends on how much you can afford to invest. But when I say that, I don't mean like you're putting all these expenses before investing. Like I'm not saying like, oh, I gotta get my hair done, I gotta get a haircut, I gotta do this, I gotta do that, I gotta do that, then I'm gonna invest. No. I treat my investments the same way I treat my car note. You feel me? Where I make sure that I invest every single month. You get what I'm saying? I don't treat it like a side gig or a side Negro or woman. You feel me? I treat it like it's something of value to me because my future is valuable to me. Your future should be valuable to you. Okay? And I would say start off with at least 10 to 15% of the money that you make monthly. And like I said, all you have to see is that it's possible. Once you start making invest money investing, it messes with your mind. You will then be like, yo, forget this. I'm about to keep dumping money in here. Like once I saw money was being made, I started looking about at money differently. Every time I get a dollar now, it's like, how can I turn this dollar into $5? Right? You start looking at the power of money because you see how it works, right? Because like I keep telling y'all, it's all a numbers game. The more you put into it, the more you'll get out of it. All right. Um, I already told you guys, remember fractional sharings is when you buy a fraction of a company. You don't got to buy the whole entire percentage. You could buy a little bit. Dollar cost averaging is when you're buying a little bit of a stock every single month. Something I do want to say, remember how I told you you never want to invest in a company when it's at its 52-week high, at its highest? When you're dollar cost averaging, you could do that because your goal is to hold and get an average over time. Your strategy isn't necessarily buying it at its lowest price. You're getting an average. So with my Fidelity accounts, I dollar cost average. With my Charles Schwab accounts, that's the account where I wait till the stock goes down and then I buy a lot of it. So you got to understand what your strategy is. So no matter if you got to start with $20 a week, $50 a month, just start because that's better than zero and not doing nothing. And I'll give you a perfect example. I could show y'all my calendar. I created what's it called? A reminder on my calendar for every Friday. I was supposed to be investing into crypto every single Friday. And I didn't stay consistent with it. Now I got that little $300. I could have had thousands of dollars in crypto if y'all been following crypto and seeing how Bitcoin hit 100,000. I made that bet with myself like months ago when Bitcoin was at like 60,000. Just think about that, right? So it's just like you telling yourself I'm gonna do it next week. Now I'm gonna do it tomorrow. That's money you losing every time by you lying to yourself. You feel me? So it's just like just start and start with what you can afford. You can always grow into more. Don't look at comparing it to somebody else or whatever. To me, my account is like $0 to some of these other people. You know what I'm saying? But to me, I don't care because it's like I'm starting. You know what I'm saying? Right? So your account could be $5, $10, but at least you're starting. All you have to see is that it is indeed possible. And be consistent. Create a schedule. I myself, I like to invest monthly. I think it makes sense because a lot of people get budget monthly where you'll get paid a certain amount of money. You know how much money got to go to your different expenses, and you can start taking money out of your checks to invest monthly. That makes a lot of sense to me. I would say figure out how much you can do monthly, set it up so that it can be automatic, set it up so that it can be recurring. If you get a bonus, if y'all get income tax, if y'all get any of that stuff, that's more money that can be invested, not money for you to go on a trip and get drunk with your friends. A word. Um, Compound interest. All right. Compound interest is super important. This is why investing is just makes mad sense. When you invest your money, Your money is basically stacking and stacking and stacking and growing on top of each other. I just don't understand why you wouldn't be doing it. This is why they don't teach us this in school for a reason. I'm not gonna go on a tangent right now. I'm gonna stop on that. But this is why they don't teach us this. Because if we knew this, it would be a no-brainer. It just don't make sense why you don't invest your money. For me, 2025, I'm gonna start being quiet and whoever do it, do it. But it's just like, yo, invest your money. It just makes sense. Compound interest. That basically means that if you start off with $100, it goes up every month $20. Second month, you're gonna have 120. The next month, you don't start off with $100 again. You start for the 120, grows again, right? So it just makes sense. Every time you invest, the money grows and it compounds on top of each other. Last thing is when to sell your stocks. That's always the question. Don't sell the stocks because you're trying to buy a wig or you're trying to get some sneakers or like do not sell the stocks for no stupid stuff, bro. Don't get like don't get me tight. All right? Only sell your stocks if you're in dire need. Like you really need money. You really, really need money. Not because like, dang, I don't have bread right now, but it's really my friend's birthday dinner or Christmas is coming. Don't just think about it. You're selling an asset to go buy Christmas gifts. Does that make sense? No. Only sell your stocks when you have made either two strategies. Time based, meaning that you held it for at least 5 years, 10 years, 30 years. I know that sounds long, but like just to think about one of my accounts, 2 more years, it'll be 5 years. You know what I'm saying? So time goes by fast. Think about some of us, I went to college with some of y'all. Think about how short of a time college was. Think about if you started investing in freshman year. Time went. You know what I'm saying? Um, so time based or percentage based. If you made 100% of your investment, meaning that if you invested $100, you made $100, you could take your initial $100 out. You could do that. I would that wouldn't always be my go-to because you know the more money you have in, the more money it could grow. But if you want to take profit, enjoy the fruits of your labor. Take profit. So 100% return, 500% return, or like just any goal that you have. All right. And just to close it out, I'm gonna just give y'all my top 5 stock tips that I've learned. The first thing is only invest into things you understand, right? I've tried to invest into cannabis stocks, but I don't understand it. You know what I'm saying? So it didn't do well. So some of the stuff that you saw read was things that I was just investing because other people put me on. And 9 times out of 10, when other people put you on to something, it may not go well because you don't get it. You're listening to somebody else. You have to understand what you're investing in. Number 2 is don't invest just because something is popular. For example, I showed y'all Nike. Like I said, it's not a day where you can go without seeing Nike or Nike in your closet. But Nike is doing terribly on the stock market. So just because something is popular does not mean it's going to make money. And that when you're starting out with this stuff, it's very important that we kind of do it correctly because if we do it the wrong way, that would kind of tear us away from doing it for the rest of our lives. So we got to make sure we're doing this right the first time, okay? Don't have FOMO. You're going to miss out. Okay? That's just how stocks work. That's how investing works. You're going to have a time where you think like, dang, I should have got it at this price. And then you're going to try to jump in it. Then you're going to lose money because you're investing off of fear. You're gambling. You're not investing off of being intelligent and strategy. Never buy an asset at its highest price. That doesn't make sense. Like I said, buy low. You want to buy when it hits 15% to 20% down from its 52-week high. And I'm telling y'all this because nobody told me this. And I've done this stuff. And it doesn't end well. Okay. Pick 5 to 10 stocks. Don't try to get a million stocks just because you think you can make money from it. I had somebody text me the other day talking about this company that owns private prisons is going crazy. And I'm just like, why would you invest into a private prison? Like, you know what I'm saying? Like, just pick companies that make sense, that are the top companies, and stick with those 5 to 10 companies and just do that. Like if you look at my portfolio, I don't have a million companies. I have the same companies: Amazon, NVIDIA, Apple, Tesla, all the other ones. You know what I'm saying? But those are my top, like, I got like a solid 7 companies that I mess with, and I stick to those companies and those index funds and ETFs, and just do that. I don't care to have every company just because it's making noise. You feel me? If I miss out on a little bit of money over there, I'm okay if I don't understand it. All right? Or I'll wait out until I do understand it. And my last thing is just be consistent and invest for the long term. And it is officially 8 o'clock, and I'm finished. Boom. Questions?
This was great. I loved it.
Appreciate y'all.
Right.
Kylie got a hand up. What's good, Kylie?
Yeah, so I have a few questions because I was kind of stacking them up a little bit while you was talking. So, okay, so my first question was, and this one it might be stupid, but I just want to clarify just to be sure. It's best to leave the money in there and let it build, right? And with what companies, oh, sorry, never mind. You just answered my question. Good, great. Should I also only invest into these bigger companies? Like only the companies that like we see all the time that we're familiar with that are, consistently making money, like Apple, like Tesla, like only these companies or
I would say start with those because you are going to understand it, and those companies also are going to grow regardless. You know what I'm saying? And like I told you earlier, a lot of this is emotion, right? And like when you're risking money, and this is like kind of like your first time doing it, and we don't really learn this in our community, you feel me? It's important to do things that you understand and that make sense and you kind of know will do well, because that will start building your financial integrity. That will start building your financial confidence. You know what I'm saying? Your investor confidence. And you need that type of confidence in the beginning because it will let you know what's possible. And if you do fall short, you won't hold on to just the fact that you fell short. You'll hold on to the fact that you know that it works. But if you start off with companies that kind of are shaky or, don't work, that is not necessarily building your investors' confidence. So that's why I recommend starting and focusing on those big companies. And I know some of them seem like they cost a lot of money to get like one full share, but that's why I said you can do the fractional investing, because even if you get a little bit of that company, you'll still make money as it grows. And the goal could be that let me invest every month until I own one full share of it. And that's why I recommend investing into those top companies. And like they're gonna do well too.
got you. Thank you for that. And I also wanted to ask, it would it well, I feel like I'm gonna answer my own question, but would it be smart to open that Roth IRA now? And I feel like it is, but if it is, right, how much money should I be investing into my Roth IRA monthly?
So it goes back to what your how much you can afford. So let's say you make $1,000 per month, right? Um, Here's what I want to say. If you don't pay rent, right, or have any crazy bills, I would say use majority of your money to save and invest. That's point blank period. Right? Here's why. Right now is the only time in our life, because I don't pay rent, just being honest with y'all, right? The only time in my life, I do have bills though, but just not rent, right? And rent is like a hefty bill, right? A lot of people, majority people spend between 70% or over and of their income in just rent, just having a roof over their head, not food, any of that, right? So if you don't have to spend that much money putting a roof over your head, most of your money needs to go into savings and investing. That's what I would say to that.
Got
So
you.
depending on what your situation is, 'cause I don't know what your situation is, put majority of your money into the saving investing, and then budget the rest of your money for going out and stuff like that too. That's what I do. Like I do 70-30. Like 30% of my money is effort money because I just know that I'm young. I'm gonna do stupid stuff. I'm gonna buy certain things. Like, you feel me? So I'm not saying like don't have fun, live like a freaking, you know, like this. No, I'm just saying that a lot of your money shouldn't be effort money. Like when we're young, we tend to make most of our money effort money. That's backwards. Most of our money needs to be investment money, and then the rest could be effort money. You feel me? And I don't got a lot of men on here. I'm not a man either, but relationship wise, I tend to, you feel me? And just logically thinking, bro, and I'm speaking to the guys right here. You gotta listen real quick. Women don't care about you for real unless you have bread. You feel me? And this is logically speaking. If you spend this time now while we in our 20s, really get into the bag and getting bread and putting your money into the investments, that only makes you more of a valuable person as you are growing into your manhood. It's real life. You feel me? So if you spend all your bread right now trying to do little stupid stuff, you're actually only taking away from your potential in the future. That's how I be thinking. You feel me? So yes, you can do little stupid stuff here, but you want to become more valuable. You don't want to start becoming less valuable. You know what I'm saying? So really practice making those smart habits now because it's real life. You see it all day. Like women literally dead don't care about you, especially as a man, if you can't provide. You know what I'm saying? So
All right, got you. Thank you for that. I really appreciate that. And my last question was just that while I was making the Fidelity account, they asked if I should do it asked where should my cash be held. So it says either the Fidelity government money market fund or the taxable interest bearing cash.
do
I have
the
no any
do
of
the
that means.
Fidelity money market fund. That just basically means that your money is going to be held in Fidelity at like in that time. So that basically means if I put $100 into Fidelity in my Fidelity account, it's going to stay in that Fidelity account, if that makes sense.
Got you. Okay, thank you. Those were all my questions. Thank you. You answered them perfectly. So
All right, perfect. Any more questions? After this class, can I show you? Oh, my fault. I'm yeah, I got you. I got you. Any more questions, feedback, anything? So y'all good, is what y'all telling me.
I just
Oh,
want
y'all,
to,
oh, y'all sleeping. What's
can I
happening?
say something?
All right, what's good, Janaya?
I just want to say thank you for taking out the time to, empower our minds and to understand that we're making it mentally bigger than what it really is. And we all have the ability to be successful and to invest in ourselves. And I'm excited to invest.
Yeah, you should be.
I say all that to say that I'm excited.
Appreciate you. And
So
I appreciate you guys taking the time out to invest in yourself. You know, I'm gonna ask y'all a question. Do y'all feel like y'all received more than $20 worth of information?
I
absolutely.
did.
Absolutely.
All right.
Very much so.
But I had to make it low entry because I understand what they do to us, right? They don't make us understand why this information is valuable. You feel me? So I had to make sure, and if y'all didn't pay, y'all wouldn't have locked in for real. So I really want y'all to get this because I'm telling you, I'm in meetings with these people who are freaking multimillionaires, and I just see it's just a disconnect of information. We don't have certain information, which causes us to not do certain things with our money. And once we get the information and we apply the information, we will now be able to be in competition and get seats at tables that we've been forbidden from. So, real talk. But y'all are free from the shackles of financial revolution. I appreciate y'all. I appreciate y'all time.
Thank you. Thank you. I'm gonna keep you updated on my progress too.
Yeah, facts. Yeah, y'all can hit me up all the time. Any questions? I know this is a lot. So any questions you ever have, don't hesitate. Like y'all all like family got my number. Hit me up on IG or whatever. All right. Appreciate you.
Sure. Peace.
Thank
appreciate
you.
you.
Thank you.
Appreciate you. Thank you.
Problem. All right. Hold on. Let me I'm gonna stop the recording. Hold up, let me stop this.